I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. House Speaker Paul Ryan isn't planning major changes to the GOP's Affordable Care Act replacement plan. That's despite a CBO estimate that 14 million Americans could lose health coverage by next year. Meantime, White House Budget Chief Mick Mulvaney is skeptical about that assessment. He says the CBO was wrong on coverage predictions for Obamacare. White House spokesman Sean Spicer says the president is extremely confident that the Justice Department will produce evidence former President Obama had Trump Tower wiretapped during the election. The DOJ has asked lawmakers for more time. The House says it has until March 20th. The U.S. is considering more penalties on Chinese companies in response to allegedly growing evidence of Beijing support for North Korea's weapons programs. That's according to the Wall Street Journal. U.S. Secretary of State Rex Tillerson travels to Asia this week. Meantime, Trump met with Crown Prince Mohammed bin Salman today. He is second in line to the Saudi throne. It is the highest level visit by a royal since the election. And Energy Transfer Partners has asked a federal judge to reject the latest attempt by American Indian tribes to stop the Dakota Access Pipeline. Oil could begin flowing as early as next week. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg.
I'm Caroline Hyde. This is Bloomberg Technology. Coming up, a steady stream of software startups take the plunge on the public market. But what's Snap's IPO a help or hindrance to the rest of the tech unicorns? Plus, Microsoft takes on Slack, officially rolling out chat software for Office 365 customers. Will it be enough to dominate this fast-growing market? And Netflix tries to outshine movie theaters. Can Hollywood stars help the streaming company shake up the film industry next? First to our lead, a handful of tech IPOs emerge in the aftermath of a volatile debut for Snap. Although they're not household names like Snapchat, they're all software companies looking to capitalize on the ever-expanding market for cloud computing. On Monday, Okta and Yext filed to go public. Then MuleSoft, also planning to go public as soon as Friday, just boosted its target share price range. And last week, we reported that Cloudera chose its bankers and filed confidentially. So does this signal a boom in tech IPOs to come this year? Or is the market just right for software giants, while Snap's wild ride keeps fellow tech unicorns tapping private investors instead? JMP Group President Carter Mack joins us now for more. JMP was one of the co-managers on Snap's debut. Also with us, guest host for the hour, Forrester Research Vice President Julie Usk. Thank you very much indeed for joining us both. And Carter, to you, Okta, Yext, MuleSoft. You've actually written a piece saying you don't get a market that is better than right now. Why is it good right now?
Well, yeah, I keep saying that the IPO market doesn't have a demand problem, it has a supply problem. And the market's actually been open and you know, has all the makings of a great IPO market. We just haven't seen companies coming to market. Snap, hopefully, is a bit of a coattail event for other technology companies, but really other companies going public in general. If you look at the average IPO last year, it was up 36%. It was about 100 IPOs. So far this year, the average IPO is up 14%. So great performance by almost every deal that's come public. Good companies coming public. You know, the markets overall are up. Volatility is very low. It's at historic lows. The VIX is at 11 or 12 and stayed that way for the last couple quarters. So you've really got all the ingredients for what normally would be a much more robust IPO market.
And it's interesting, we've just been showing charts there of how 2016 was rather slower than 2015 for sure, and but still tech was leading the way in a certain extent when you looked at sectors. Julie, I want to ask about where the sweet spot is, because a lot of the ones we're talking about, MuleSoft and Yext, they're in the $100 million range, not the $3 billion that we saw come from Snap with a more than $30 billion valuation. Are we going to see some big ones like Cloudera start to come out?
So
Yeah, I would say, why not? Because I think, exactly what you're saying. I think there's a supply problem right now. There's not a demand problem. And the other thing I think you would point out, you'd probably agree with, is that, the market and the economy has been very strong in the United States the past 7 or 8 years. And it's hard to say how long that's going to last.
Yeah.
So if I were the head of a small, young company, I would also just be wondering, how long is this window going to be open?
I think that's fascinating because we heard just yesterday from Airbnb CEO Brian Chesky saying, well, we're halfway through our 2-year IPO lineup. So basically saying they're going to come live in 2018. By that point, rates will have gone a little bit higher. You actually said before that the private markets have tapped out, but then we saw Airbnb raise $1 billion. Have the private markets got a little less lackluster?
It's a bit more nuanced. I think a company like Airbnb can continue to raise money in the private markets. It's a real bellwether. It also can probably go public at any time, no matter the IPO market. So they're going to dictate their own timing. I think for the broader universe of unicorns or companies getting high valuation in the private markets, I think we're kind of at the end stages of that, and especially seeing that with the big public mutual funds like Fidelity and T. Rowe Price and others that have been investing in these late-stage privates. I think they're taking a bit of a pause. And,
why?
They've got a lot of private companies that they've invested in that I think they want to see returns on and get public or see M&A events for. So, and just in general, want to see more evidence that those valuations are supportable in the public markets.
So is Forrester bracing itself for a Dropbox, for example, or some of the not quite so juggernauts as Uber and Airbnb, but some of these private companies to come public?
Yeah, so I would echo what you've just said, because I think the other part of this is there's a lot of these companies going public with valuations that are based on just a lot of optimism about how much companies are going to spend on marketing or spend on advertising on mobile, and there isn't a strong business case for the revenue to justify some of these valuations that we're seeing.
Carter, interestingly, you weren't only just on Snap, you were on App Dynamics, which got swooped out of the public market's hands because Cisco came in at the 11th hour. We've seen that interesting element occur, but also the voting power that we saw with Snap being taken away from shareholders and a lot of control being held by these companies. Is that a theme that we're going to see as well?
Only a few companies can pull that off, I think. Snap was, I think, was going to have the demand for their deal, whether they had full voting rights or not. I think that's unique for Snap and for a few others. When Facebook went public, they had super voting shares as well, not to the extent Snap did. But I don't think that's going to be a trend.
Or swooping in at the last minute with
Well,
M&A.
swooping in at the last minute could be. App Dynamics was about to launch what would have been, I think, a very successful IPO. It was well oversubscribed. They were at the pricing table for their IPO when Cisco came in and really paid a price that was like double what the IPO price would have been. So, the bigger companies need to get growth, and buying App Dynamics for Cisco is a way to do that, and I think you may see more of that.
Exits are plenty, it just depends in what way they come. Thank you very much indeed, of course. That was Carter Mack of JMP Group, and Julie Oscar, Forrester Research, is sticking with us this hour. And a story we're watching for you now. Germany is threatening to fine social networks like Facebook more than $50 million if they fail to give users the option to complain about hate speech or fake news. The punishment would also apply if the company refused to remove illegal content. The first draft of the legislation was presented Tuesday. If passed, it would be the steepest penalty Facebook faces in any country where it operates. The move comes as Germany, of course, prepares for its September election, and Chancellor Angela Merkel's government is under pressure to curb the spread of fake news. Now, we just covered how market conditions impact the IPO market. Next, we'll dig into how this cycle of low stock volatility is impacting the biggest public tech companies. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out. It's at Bloomberg Tech TV, weekdays at 5 p.m. in New York, 2 p.m. right here in San Francisco. This is Bloomberg. Now, the digital ad market in the United States will grow by 16% this year to $83 billion. That's according to eMarketer's latest forecast. Revenue from digital ads will increase 15% for Google and 32% for Facebook. The social network's furious growth is also starting to slowly shrink the gap with longtime digital ad powerhouse Google. And what about newest public company jockeying for advertisers' dollars? eMarketer estimates that Snap will boost its ad revenue by 158% to $770 million in the US this year and could reach over $2 billion in 2019. Now, it was a relatively downbeat day for US stocks, with the tech-heavy Nasdaq falling 0.75% at the lows. Let's bring in markets reporter Abigail Doolittle in New York. And Abigail, what's behind perhaps a little bit of the sell-off?
Well, you know, Caroline, we do have that big Fed decision tomorrow, so perhaps investors are taking a bit of a pause. But as you mentioned, at one point, the Nasdaq was down far more than both the Dow and the S&P 500, down about 0.75%. And at that point, the declines for stocks were really being led by the chip stocks, including Intel. Intel had been down more than 1% following the declines the day earlier on the Mobileye acquisition. Intel actually recovered, but left both Broadcom and AMD lower in its wake. Microsoft was another loser on the day, and then PayPal. PayPal was down more than 1%, having its worst day since the end of February after Google said that there's a Gmail app that will allow users to send money, so a bit of competition there. So some weakness for tech today, but on the year, Caroline, it's a very different story. When we hop into the Bloomberg and take a look at BTV 6783, up top in white, that is the S&P 500 technology sector, up about 11% on the year. Down in orange on the bottom, down 9% energy. So again, tech is the top sector this year, really being helped out by a lot of the big tech names.
And what's been so fascinating is not only tech being the outperformer, but also the volatility being, well, the VIX down, 30% since the election. Volatility is so low across the board. How is that playing into some of this tech ramp up?
Well, it is pretty amazing, this lack of volatility. Lots of talk about how the VIX is at record lows, but the NASDAQ 100 VIX is even lower. It is at a record low. And we have another great chart in the Bloomberg. This is BTV 6781, and this is the NASDAQ 100 VIX to the S&P 500 VIX, encircled in yellow there at a 9-month low. So really not a lot of volatility there for technology stocks. You could even say some complacency. Behind this, Caroline, is the fact that the NASDAQ 100 is up 11% on the year, the S&P 500 up about 6%. So those big tech stocks are really outperforming. And again, not a lot of fear out there on the part of investors.
Whittle it down for us. You were telling us how Intel, PayPal were down on the day. Who are the big outperformers on the year?
The big outperformers on the year, all of those big technology names, including Apple, Amazon, Facebook, and Google. Those are some of the top tech stocks. And in fact, the FANG trade is alive and well. Just one last chart in the Bloomberg here. This is BTV 6742, and in pink on the bottom of this chart, there we go. In pink on the bottom of this chart, that's the S&P 500 up about 5.5% on the year. Up top, up 21%. Facebook, all of these FANG stocks, the big internet stocks, are trading sharply higher. Bloomberg intelligence analyst Paul Sweeney says this has to do with expectations about President Trump's potential tax cuts, that this will help advertising in all of these internet stocks. It'll be interesting to see how it plays out, Caroline.
Yeah, Abigail, I was checking out Apple's RSI, Relative Strength Index. It's now been overbought for at least a couple of months. Quite amazing rallies. Yeah, that's another one of my favourites. Abigail Doolittle, news, of course, Bloomberg News markets reporter, digging into the Bloomberg terminal and everything else for us, indeed, in tech. Now, coming up, corporate email traffic is moving to chat, and Microsoft wants in. How the company is taking on chat pioneer Slack. That's next. And this is Bloomberg. Now, Microsoft is officially joining the chat world. On Tuesday, the company rolled out its workplace collaboration software called Teams, a program that has been in preview mode since November 2016. Teams is now widely available in 181 markets and already has 50,000 Office 365 customers trying it. Microsoft is counting on integration with its global Office and Outlook programs to challenge the likes of Slack and Google Hangouts for big corporate customers. Joining us now from Redmond, Washington, is Bryan Goode, General Manager of Microsoft Office 365. And I also love the fact you're Senior Director of Modern Collaboration. Talk to me about the collaboration I can now do using Teams, because you've been rolling out more and more features thick and fast.
Yeah, absolutely. So we're really excited about what we've introduced today with Microsoft Teams. It's a chat-based workspace in Office 365, and it brings together the people, the content, the conversations that teams need to be able to get work done. So we're really excited about it and the addition to Office 365 that it brings.
organizations already using it? Can you give us numbers? Where internationally is it being rolled out so far?
Yeah, great question. So we have 50,000 organizations that are using it since we announced the preview back in November. That really runs the gamut, both from the very small customer to the very large. We've got customers across the Americas, of course, as well as into Europe and even into Africa and Asia. And we're really impressed by the demand that we've seen so far. I would say that some of the customers that have given us great feedback on it include folks like Accenture, Alaska Airlines, Expedia, Trek Bikes, Sage Software, and a number of others. So the customer demand and response has been quite impressive.
Bryan, you mentioned Expedia there, and we spoke to the Senior Director of IT for that business, and he said they're using it, they're loving it, but they're also using rivals like Slack, like HipChat. That doesn't seem to be yet being phased out. Do you see Teams working alongside these other products or slowly pushing them out?
Well, today marks the general availability of Teams, and I think many customers are looking for that general availability moment to start to migrate their employees from one platform onto Teams. And so this is a big moment for us. And I'll tell you what customers tell us they like about it is the deep integration with Office applications. So the integration with Word, Excel, PowerPoint, it's really a hub for teamwork. They also love the security and compliance and manageability we bring to the table with Microsoft Teams. So again, we're really excited about what we bring to the table and think we've got a compelling offer for our customers.
Is that how you win out? Is that the USP, that you basically have such deeply integrated products already across the business space that they'll go with what they know and what is already deeply integrated within their businesses?
Yeah, I think customers are looking for one less app, one less window, wherever they can get away with it. And they're really looking for things that work together. And that's a statement both for the people using these applications as well as IT. And so we think we have a great value proposition with Office 365, really designed to be this universal toolkit for customers and address the broad range of needs they have across their company.
So do you think Slack will exist in the next couple of years?
I don't know. That's a good question. I do feel really good, though, about what we have to offer and what we bring to the table. The customer response, as I said, has been really remarkable. It's surpassed even my expectations. And I'm excited for what the future holds with Teams and Office 365.
You're also working and able to integrate other businesses, not competitors, but other companies that help perhaps with the employment elements of things, Zenefits, for example. Is this all about being an open infrastructure at the end of the day?
Absolutely. Yeah, we're working with over 150 partners today. And I think what our customers expect is not just, again, the integration with, the Microsoft applications, which is certainly important, but also being an open platform. And that's why we've invested deeply in giving people the ability to customize their environment in Teams. And that means working with a variety of folks outside Microsoft.
Did it take a Slack to show that this market was where it was at, and to show the way in which Microsoft therefore needed to copy, for want of a better word, or did you always have this in your mind's eye?
Well, I'll tell you, we've been working on Microsoft Teams now for several years, and it's really a response to customer demand. And customers told us loud and clear they were looking for a hub for teamwork, a place where a team could come together, stay on the same page. And really, that's what we've delivered with Microsoft Teams. So it's not in response to any particular competitor. It's really in response to the demand we see from our customers.
Will it kill email?
We think it's a great complement to email. The modern company today, still requires email. You still have to receive emails from people inside the organization as well as outside the organization. So we look at Microsoft Teams as a complement to that and a complement to the other tools that enterprises need to be able to get work done.
Bryan Goode, General Manager of Microsoft Office 365. Thanks so much for joining us on a very busy rollout day. Now, there are a lot of work-based collaboration and customer-focused tools, and one in particular has received, a lot of hype: chatbots. Both Microsoft Teams and Slack allow outside companies to build chatbots for their products, but companies are proving slow to adopt them. Why? Let's bring in our guest host for the hour, Julie Osk, Vice President of Forrester Research, who has done some digging, some great analysis. And Julie, give us the stats, because very few companies are really adopting chatbots.
Yeah, because I think that's the thing. There's a lot of hype because there's a lot of numbers thrown around, like 50,000 chatbots on Facebook Messenger already. But then when you go and look at the Fortune 500 and those companies that are targeting consumers, only about 4% of those companies have built a chatbot where it's a conversation between a human and a machine, and only about another 13% are using that platform to have conversations with their customers.
So let's roll it back and just remind ourselves, chatbots are basically what seems to be a person on the other end helping me with my questions, but actually it's a computer able to respond to me in an immediate way.
Yes.
What do you think is putting off companies adopting it in the right manner and at the speed perhaps the hype would have dictated?
It's hard. It is really, really hard to build a chatbot. And if you look at those chatbots today that are successful, they do very, very simple things.
Which ones are successful?
So, for example, if you look at Domino's Pizza, that allows me to check the status of an order exactly the same thing I ordered the last time. Right? It doesn't let me flip through the menu and build a pizza and order a pizza. It lets me do something that's very simple. And most of the chatbots that you see are what we call forms. You know, they're pushing out content. They're pushing out 2 or 3 options, and they have a very narrow conversation window, so to speak.
And so the common mistake is potentially companies being a bit too ambitious to begin with?
So a bit too ambitious, and I think a bit too optimistic about what the technology can do. We have this thing that we call, the chatbot line. And it kind of, the stuff on the right-hand side is stuff you can do today. It's easy and it's simple. And the stuff on the other side is harder to do. And artificial intelligence and other technologies are going to have to evolve. Because at the end of the day, you can't anticipate everything I'm going to say or how you're going to respond to me. So you have to teach machines how to learn and how to respond to humans. And it's very, very hard to do.
So I'm a chief marketing officer, a CFO, CEO of one of these companies, Fortune 500, sat here watching this program now. Where do I start? Where do I start grabbing that low-hanging fruit if I wanted to get rolling on my chatbot?
Yeah, so the first thing you do is you start. Like, that's the first thing you have to do, is you have to start. Because I think if you look historically at building digital experiences or mobile experiences, you could throw some money at the problem and catch up in a few months with a few $100,000. It is not going to be as easy to catch up here because your company, your firm, has to teach the machine how to learn and how to respond to consumers. So that's the first thing. The next thing I would do is I would look at my consumers. Are they even on these platforms? Does it make sense? Do they want to use these technologies? And then the next thing that I would do is I would look at my call logs and some of my customer service and say, where's the low-hanging fruit? Like, what are the really easy, repeatable questions that consumer tends to ask us? Like, what is my bank balance? What time is my flight going? What is my gate? Things like that are simple and easy to execute on.
Slowly, slowly, catchy monkey.
Yes.
Julie, as ever, that was great analysis. Forrester Research Vice President Julie Usk, sticking with me. Now, coming up, those in tech are expecting a bevy of startups to take to the public market, but could the companies look to alternate routes instead? This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. The Netherlands hits the polls tomorrow for a parliamentary election being considered a bellwether for the future of populism. Far-right candidate Geert Wilders is running just behind the incumbent two-time prime minister. The elections come ahead of polls in France and Germany over the next 6 months. British Prime Minister Theresa May says the UK is on track to exit the EU on the timetable she set out. She addressed Britain's House of Commons today, saying she will formally trigger Article 50 to begin the exit in a few days. Meantime, British and Scottish leaders traded barbs today over Scotland's desire to hold a second referendum on independence. Scottish First Minister Nicola Sturgeon says she intends to ask voters in late 2018 or early 2019 if they want to leave the UK. French presidential candidate François Fillon has been charged in an investigation into taxpayer-funded jobs for his wife and children. The charges further damage the former frontrunner and former minister's chances at winning the presidential election. Thousands of public doctors in Kenya have agreed to end a 100-day strike for better pay and overtime compensation. The strike has been blamed for dozens of deaths in the African nation. Doctors and medical practitioners are expected to resume work Friday. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Tuesday here in New York, already 8:30 a.m. Wednesday morning in Sydney. I'm joined by Bloomberg's Paul Allen with a look at the markets. Paul, good morning to you.
Good morning, Elisa. Thanks for that. Let's take a quick look at New Zealand, the only market in the region currently open, and it's off a little right now, down a bit more than 0.1%. We're expecting a weaker open here on the ASX as well, futures pointing to a decline of 0.2%. We'll be keeping a close eye on the energy space today for a couple of reasons. First of all, energy stocks getting hammered again on Wall Street, and also here in Australia, Prime Minister Malcolm Turnbull is going to be meeting with oil and gas executives to boost production. Energy prices in Australia have actually been on the rise. Plenty of news happening around which might affect markets today. Li Keqiang is going to give his only press conference of the year to China's National People's Congress, so we'll be watching for any news of leadership transitions around there. And also the US Secretary of State Rex Tillerson is going to be making his first visit to Asia, touching down in Tokyo this morning. We'll also be keeping an eye on Japanese industrial production. That's coming out in a few hours' time. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. And back to our top story this hour in the landscape for tech startup funding. As we discussed, a handful of software companies are following in Snap's footsteps with a public debut. But outside of that sector, it's unclear whether other tech unicorns will follow. Meantime, Snap shares continue to slide after the first week of trading. And access to capital on the private market still appears readily available, given just, Airbnb's closed a $1 billion round. Joining us now for more perspective, Sway Ventures General Partner Bill Malloy and Evrythng CEO and co-founder Niall Murphy. Evrythng just closed nearly $25 million in Series B funding, led by Sway. Gentlemen, thank you for joining us in a snowy New York. And Bill, I'm going to ask you first, what did you see in Evrythng? And indeed, just for our viewers, that isn't a typo, Evrythng is indeed spelled that way.
Yeah, from our end at Sway Ventures, first and foremost, it's just an amazing team. I think what Niall and his executive team have been able to do, starting out a small team, now coming to almost 60 team members is amazing. So we're really making an investment in them as a team. And then the second thing is the market. The market for connected things continues to grow, and I think being able to have data layers on top of that you can visualize and then enterprises can use them to help run their businesses better is just something that we have a strong belief and conviction in.
Now, your business is all about giving inanimate objects a digital identity, really. Millions of them. Is the money to make sure it's billions of them? Is it growth that the money's being put towards?
Billions, absolutely. If you think about the fact that there are about 3.5 trillion consumer products made and sold every year in the world, there's an inevitability to every one of those becoming a digital thing. And our mission is to be managing as many of those as digital things as we can.
Bill, what's your outlook for the Internet of Things in terms of the landscape, in terms of competition, in terms of where the growth sectors are?
Yeah, I think if you look at it, big picture, there's some interesting stats from a growth standpoint. In the next 5 years, there's close to $500 billion in revenue that'll be produced from vendors selling in and around the Internet of Things. And then if you take that out 10 years from now, there's somewhere between 70 and 80 billion connected things. So from our standpoint, being able to invest in a team as great as we have at Evrythng with a market that's growing in that different dynamic is something that we strongly believe in. And I think you touched on competition. It's interesting, you have large players like IBM and Accenture that are doing data aggregation, all the way down to Cisco's most recent acquisition of Jasper. So there is competition, but I think as the market continues to grow, there's room for a number of different successful companies.
Niall, it's interesting that one of your backers originally was Cisco. That's who Sway Ventures have been joining as original investors, along with the likes of Samsung. You've always had quite an international base of backers here. How has it been as a UK-based company in the Brexit negotiations raising funding?
Well, I think from the word go, we've been a global organization. We operate out of the UK and here in the US, here in New York. And I think in an evolving digital ecosystem, you have to, as a startup company, you have to start from a perspective of looking at it globally. About half of the world's consumer product manufacturers are based here in the US. And so it's fundamental that we are centric on the US as the driver of the digital ecosystem. Capital-wise, a substantial proportion of the world's venture capital is obviously based in the US. And so we've set out that way from the word go, and it's been our focus to build a significant presence here.
Bill, talk to me about where you see the funding situation right now. Is private capital still awash aplenty? I know that you and Sway Ventures got into the Uber round in Series E. Is money still coming into the big private companies, or are they looking to go public?
Yeah, look, I think it's company by company, but what I would say is, independent of where we are in a cycle, I think great companies are still able to get access to capital. And it really is going back to that company by company. We've seen companies like Snap, as you highlighted earlier, that have gone public, and we'll see their stock has been on a decline. We'll see where it goes from here. And then there are other great companies like Evrythng that I think being able to secure $25 to $30 million in a private market transaction with some great investors is an accomplishment. I think we'll continue to see more of that from companies around the world.
Niall, what's the outlook here? Are you expecting for a Cisco to come swooping in and buying you at the last minute when you're looking to go public, as we saw that dynamics, or are you insisting on becoming a bigger player and potentially going public in a few years' time?
I think as an entrepreneur, one's always got to be open-minded. However, we're building a plan which is about a scalable business moving into profitability and obviously accessing an extremely large market opportunity as the world's products are digitized. We'll follow that journey and we'll see where it takes us. I think that there's a high-scale business opportunity, certainly focused on the execution for our customers rather than thinking about what the exit path is at this point.
Talking about journeys, Bill, I have to ask you about what you've been looking at with one of your key portfolio companies, Uber, and the debacle that they've been having in terms of PR crises. Is this something that makes you worry about your investment in the business, or do you think it's on the right road?
Yeah, I mean, look, I think, as you said, Uber has not had a great 2017 to start, to say the least. So, I can count the things that have gone wrong this year, and I think we take them very serious as investors, and I know Uber does. So I think we stand behind the company and what they're doing, and right now it's really about how they react to the different components that are going on, within their business and outside of the business. And I think long term, we still fundamentally believe in them as a great company that will continue to grow. And we hope that they continue to take the right actions to do what they can from everything they've done in the last few months.
I want to thank both of you for walking in the snow and the cold and coming and joining us live. Thank you very much indeed. A great conversation with Evrythng co-founder and CEO. Congratulations on the funding round, Niall Murphy, and Sway Ventures founding general partner, Bill Malloy. Now, Bill Maris had a change of heart. After pulling the plug on a $230 million healthcare-orientated fund in December, the prominent venture capitalist and former CEO of Alphabet's venture investing arm will now proceed with a smaller fund of $100 million named Section 32. Bloomberg's Emily Chang spoke with Maris back in December, where he explained why he scrapped the plans. Take a listen.
I did this crazy thing called changing my mind. It was, it's wild, I know, but I did it. I left, hundreds of millions of dollars behind, but I did it because I feel like there are a lot of venture funds right now in the Valley. Every couple days I see new announcements of new funds, and I felt like after 10 years in the business, or close to it, there might be other ways to have a bigger impact.
Changed his mind again, and Maris's new fund will have the same focus on biotech and healthcare startups and is expected to close later this month or early April. Now coming up, Toshiba is considering a big move to improve its bottom line as the tech giant grapples with massive write-downs. We'll explain why next. And a reminder of our interactive TV function. You can find it at TV Go on the Bloomberg. You'll not only be able to watch us live, but also see previous interviews and dive into any of the securities or Bloomberg functions we talk about. And you can become part of the conversation by sending us instant messages during our shows. Please do that. This is for Bloomberg subscribers only, though, I'm afraid. Check it out. It's at TV Go on the Bloomberg. This is Bloomberg. Now, in the latest tech revolving door, Apple adds a mobile security expert to its team. Jonathan Ziarski provided technical expertise during Apple's standoff with the FBI in the wake of the San Bernardino shooting. He filed a brief in support of Apple and argued against the FBI's demands to help unlock the shooter's iPhone. Ziarski is known as Nerve Gas in the hacker community and for his colourful Twitter commentary. But now he's working for a company as secretive as Apple. His account has been disabled. And just announced, LinkedIn co-founder Reid Hoffman will join Microsoft's board. This comes 3 months after the world's largest software maker acquired the corporate social network. Hoffman's addition takes the board up to 12 members. And big tech news out of Asia now. Conglomerate Toshiba is considering the sale of a majority stake in Westinghouse Electric Nuclear Operations. That's as the company grapples with massive write-downs. The Japanese giant made the announcement as it gained approval to delay the release of third-quarter earnings. Again, that's until April the 11th. Westinghouse, which could be written down by $6.2 billion, has been in the centre of Toshiba's most recent problems amid cost overruns on nuclear projects and related litigation. It's now seeking to sell its memory chip unit. Let's bring in Bloomberg television editor-at-large Corey Johnson. And painful, missing a second deadline in terms of its earnings report, and it needs to get rid of some assets.
Well, this is an amazing story. And it starts with Steve McQueen. Remember The Great Escape? Steve McQueen played the guy trying to escape as a prisoner of war. He was playing the true life story of a guy named Alan W. Vostell. And the Alvin W. Vostell electrical power generating plant in rural Georgia is a nuclear plant that Westinghouse has been building for some time now. This Westinghouse
Great context.
That was acquired from Chicago Bridge and Iron and was acquired by Toshiba just a few years ago. But with it, they acquired this big problem, and the problem was the way they reported. There's so much accounting involved here. The cost of this plant has now spiraled from about $4.4 billion to $5.8 billion. They're building 2 reactors at this plant, and the timeline has gone all the way into 2020 till the final construction is supposed to end. So the accounting over this has apparently been screwed up somewhere along the way, whether intentional or not, and that's what Toshiba is trying to figure out.
Since 2008, right?
Yeah, and so they first announced that they had an accounting problem here about a year ago, not even quite a year ago, 6 months ago. Stock fell dramatically, and as a result, Toshiba is still trying to uncover what the problems are and how far back they go. So what they told us today is that they've figured out the fourth quarter, but they don't know if it affects the previous 3 quarters of calendar year 2016, and they have to go back and do that, and think it's going to take until April for them to figure that out.
Quite amazing. And meanwhile, they need to steady their own ship to a certain extent. They need to dispose of certain assets, bring in some money, and the memory chip one has been the one that's on the chopping board, and quite a tasty price point as well.
Well, the memory chip business is maybe the best business that Toshiba holds these days. Yeah. So it's the one they might get the most for. However, that's the one they don't want to sell because it's the best business they've got. The problem with selling this Westinghouse nuclear business is that the way these contracts work is they've got some fixed price plus 10% cost with the deal they've got with Southern Company and Georgia Electric and Power. And the problem is that the costs have been rising. They've been in a battle, the Westinghouse unit has been in a battle with the authorities in Georgia and with Southern Company about how much they can jack up the price. Interestingly for Bloomberg Technology, one of the most expensive pieces of a nuclear power plant is the cybersecurity protocol. So they were actually involved in a dispute resolution with Georgia Power and Light, where they actually went through and said, you can't increase the cost of this any more above this number, including cybersecurity. And cybersecurity alone was singled out as an expensive part of this thing because it's really an interesting story. And this new agreement here.
But I mean, buyers, Westinghouse. I mean, if they are going to take on such a potential bag of snakes, would it be Chinese, Japanese buyers that we're looking at?
There's thoughts that Korean companies could be interesting as well. It's probably unlikely that we'd see a Chinese buyer because it'd be hard for a Chinese buyer, a Chinese-owned company, to get work to build nuclear power plants here in the U.S. And so the result is there aren't a lot of companies who could be willing to take this thing on. And again, as they encounter more and more problems, it is a very tough business when the accounting's right. But when the accounting's phony, it's a really disastrous business.
And so could we be waving goodbye to Toshiba as a technology business? I mean, what more is there of tech other than the memory chip element?
I mean, fundamentally, they're going to have to figure out how big the problems are here, and that's the thing they don't know right now. And so for them to make any decisions about what to sell and when to sell it is really a requirement that they're going to figure out after they figure out how deep the problem is. The other issue here is that they have not only made price guarantees, but they've made guarantees about what their credit ratings are going to be. And so that if they lose their credit rating from rating agencies, or if it's lowered, they'll have to secure additional credit or additional letters of credit just to keep doing the work that they're already in. So they really are in a tangled mess.
Corey, only you can bring in Steve McQueen and the technology behind nuclear.
Yes.
It's always need you here on these sorts of
story.
programs. Corey Johnson, thank you as ever. Now, a program note. On Wednesday, we will have, of course, full coverage of the Fed decision along with Janet Yellen's news conference right here on Bloomberg Television and Radio. It, of course, affects all areas of the economy. Coverage begins at 1 p.m. New York time. Coming up, Netflix has a new strategy to outdo movie theaters. How the likes of Will Smith, Brad Pitt, Tilda Swinton and Martin Scorsese are joining forces with the former industry outsider. This is Bloomberg. Now, Amazon is trying to attract shoppers from China. The company's portal in Japan will start accepting UnionPay cards. This is part of an effort to sell more merchandise to Chinese shoppers wherever they are across Asia. Amazon rolled out a simplified Chinese language version of its Japanese website last year to cater to booming demand by shoppers seeking everything from Japanese books and music to cosmetics and baby products. There are more than 6 billion cards in circulation of UnionPay, which makes the company a key rival to the likes of Visa, MasterCard and other issuers. Now, Netflix is doubling down on plans to shake up the movie industry. The world's largest paid video service will release about 30 original films this year, ranging from micro-budget pictures to lavish Hollywood productions. Now, that's a bigger slate than most major studios claim. Not to mention its television offerings, Netflix will spend more than $6 billion on TV shows and movies this year. Joining us from Austin, Texas, is Bloomberg News reporter Lucas Shaw, and still with us, Julie Osk, Vice President at Forrester Research and my guest host for the day. And Lucas, it's a brilliant story that is currently out. I urge people to go and see it on the terminal or online. Big names, big budgets. Tell us about why, though, Netflix is focusing on the film industry.
Yeah, well, look, Netflix's goal is to be the most popular online entertainment service in the world. And if you rewind 4 or 5 years ago, that was primarily through other people's TV shows and movies, products that it licensed from them. So you'd go to Netflix if you wanted to catch up on something you'd heard about, but maybe didn't have time to see when it was in theaters or on live TV. Then they shifted into funding their own original TV shows because that's what people spend the majority of their time on Netflix doing. So they made House of Cards and they made Orange is the New Black. And all the while, movies are still a popular type of programming on the service. And once they got really into their groove with the TV shows, they are now moving forcefully into the movie business. And you're going to see them release a lot of their biggest efforts yet this year.
I mean, you talk about in your story the $90 million being spent on Bright, which focuses on Will Smith coming towards them. They've got Brad Pitt, Tilda Swinton lined up for a comedy. They've got big budgets. What about what they're not doing that perhaps Amazon is, though? And they're not allowing it to play in theaters. That's really what's putting off Hollywood, is it?
Yeah, so the way that movies get released these days is that the theater owners, your AMCs of the world, get an exclusive period where movies are only in theaters, and then later on they can be sold on iTunes or appear on a streaming service. There are some movies that appear on the same day at home. Those are called day and date, but they tend to be relatively small budgets, independent films. For your Iron Mans, for your comic book movies, you have to go to the theater for a long period of time. And movie studios want to condense that window, but they're still respecting that theater owners need people to show up in those first couple of weeks. Amazon has also respected theater owners' desires and has partnered with traditional movie distributors so that a movie like Manchester by the Sea, which won a couple of Oscars, was in theaters for a long time. And I'm not even sure if it's on Amazon yet. I remember checking a month ago and it still wasn't there, and it had been out for a couple of months. Netflix is all about people using Netflix. They don't really care about the theater owner's business model, and so they want movies to be on Netflix and in theaters at the same time, and most major theater owners then will not release a Netflix movie.
Julie, as an analyst looking at Netflix, do you think this is a wise place to be splashing the cash?
Yeah, I do believe so. If we look at the reasons that consumers cut the cord, original content and attraction to the content is one of the top 5 reasons that consumers cut the cord. And according to Forrester Research, we see the number of people who have cut the cord has doubled in the past 3 years, and the folks that are interested has also doubled in the past few years.
So, taking on Hollywood in this way with $90 million budgets and wooing in Will Smith, do you think that's the right way to go to, will we not want to be going to the theatres, we'll want to be getting our films from streaming instead?
Well, I think it's a very dated model that I think, some of the film industry has down in LA. As consumers today, more than half of us own at least 3 connected devices. We want the option to watch it on my big TV at home, watch it on my tablet, watch it on my laptop, watch it on my smartphone. And companies like Netflix have adapted and responded to what consumers want much faster than some traditional industries have.
Scott, let's take it out to Lucas, because you've done some reporting also about, some of the industry veterans that Netflix has got on board. Can you briefly just tell us who they've been hiring?
Yeah, so just today, shortly after our story ran, they announced that they had hired this guy, Scott Stuber, who is a very experienced, capable producer. He made movies like Ted and The Breakup, lots of comedies and romantic comedies. He had a production company that was based at Universal Pictures, which is one of the 6 major studios, and he'd previously been an executive at Universal. So he's someone who's been around Hollywood for a few decades, and he is going to be charged with kind of trying to bring in even more talent for Netflix's offering.
We'll see how that continues to go. Lucas Shaw, brilliant reporting, Bloomberg News reporter, thank you. And Julie Osk, Forrester Research Vice President and my guest host for the hour. Wonderful to have you with me throughout the day. Now that does it for this edition of Bloomberg Technology. Coming up on Wednesday's show, we'll be speaking with Vinod Khosla, founder of Khosla Ventures, and Bipul Sinha, CEO and co-founder of Rubrik. Do tune in. This is Bloomberg.